So I figured this was a time that I really would kind of just talk to everybody, explain what's going on in the world right now, financially, economically, politically. There's a lot going on right now. I want to focus on the finance part, what's going on with the stock market, the crypto market, where the economy is headed, going into a recession, inflation's at record levels, oil's going up. So, I want to just start off by saying, first of all, that no matter how bad things might seem right now, no matter how bad a shape you might be in right now, if you're in the crypto world, you got slaughtered. Number one, things always go in cycles. So as dark as it might seem right now, it's no way under the sun permanent. "93% of surveyed businesses increased their visibility and control after upgrading to NetSuite. Over 28,000 businesses already use NetSuite. Head to netsuite.com/wolf for a special one-of-a-kind financing offer. That's netsuite.com/wolf, netsuite.com/wolf. Hey, JB here, the Wolf of Wall Street, in the Wolf's Den for another awesome podcast. I have the best guest of all this week, me, solo podcast. So I figured this was a time that I really would kind of just talk to everybody, explain what's going on in the world right now, financially, economically, politically. There's a lot going on right now. I want to focus on the finance part, what's going on with the stock market, the crypto market, where the economy is headed. I think it's one of those times where everyone's like scratching their head. You're hearing about things that you never even heard of before, like stagflation, a word you probably never heard before, or at least never lived through. I have. We're going into a recession. Inflation's at record levels. Oil's going up. What do you do? Where do you put your money? How do you get ahead in a time like this, right? So, I want to just start off by saying, first of all, that no matter how bad things might seem right now, economically, no matter how bad a shape you might be in right now, if you're in the crypto world, you got slaughtered. Number one, things always go in cycles. So as dark as it might seem right now, it's no way under the sun permanent. I've been through this before, right? Let me go back in history here. So when people say, what is this crash? And we'll focus on crypto first here, right? What does this crypto crash remind you of? Well, it's a couple of things. There's a few different crashes all into one. So let's start off with the obvious one, which is the dot-com bubble, right? Back in 1999, which burst officially in 2000, right? So what was going on there? Well, listen, you had this amazing new technology back then, which was the internet, right? And Wall Street, what they do is they'll latch onto a way to make massive sums of money, and they manufacture a bubble. They saw the opportunity to use shit.com onto anything. Just add .com, and that's all you need to take a company public, create a massive valuation on the stock exchange, earn ridiculous fees for themselves and for VCs that are behind these companies, right? And then when the bottom falls out, the American taxpayer is basically caught holding the bag, and Wall Street makes a bloody fortune, and then if it gets really bad, the public bails them out. But what happened there, if you look at this, it's very striking comparison here. You have all of these companies that should never have gotten public. They should not have gone public. They were not worthy of going public. They didn't have real business models. They should never have been underwritten by these large brokers, but they did go public. They soared to ridiculous valuations, and human beings, how we're built, we chase stocks on the way up. We tend to thrive in this sort of bubble mania we get involved in, right? And then when it got as high as it could possibly go and there was no more fools left to keep buying, it crashes. And what happens is when the market crashes, what do you see? Well, you start to see which companies were real and which ones weren't, right? At the end of the day, you have some of the largest companies in the world that emerged out of the disaster, right? One of the most obvious ones is Amazon, right? Just, out of the ashes comes one giant company. Now, there were many more besides Amazon, but the point is that when a crash happens, all it does, it shakes out all the bullshit. It sort of cleanses it. It separates the wheat from the chaff, right? So if you look at 1999 and you look at what's happening right now in the crypto world, what do you learn from that? What conclusion can you draw? Well, it's pretty obvious, right? That 99.9% of the deals that went public, so to speak, in the crypto market never should have been floated. There was no reason for them to exist. They were taken public to create fees. I'll give you one perfect example, right? You look at something like Bitcoin, right? Now, what is Bitcoin's use case? Well, Bitcoin, number one, is a store of value. You say, but wait a second, it hasn't been a very good store of value, Jordan. It's down by, 70% or 65%, right? How is that a store of value? What I'm talking about here is over the long term. The actual thesis behind Bitcoin is that over the long term, as it matures, at the end of the day, there's only 21 million coins, right? That creates a limit in supply. As the adoption curve keeps rising and keeps rising over the next 5, 10, 20 years, right? The price of Bitcoin being scarce will rise along with it. So there's a reason for Bitcoin to exist. It was the first coin out there that made any sense. There was actually experiments before this, but it was the first one that actually made any sense. The math behind it was very elegant. And over the last 11 or so years since it first, hit the market, right? It's developed a very, very widespread following around the world. So if you ask them, what does Bitcoin serve a purpose? Yes, it actually does. You could hate Bitcoin or you could love Bitcoin, but you can't look at Bitcoin and say it's a total scam at this point. You just can't. There's too many people. There's governments that are behind I'm not even talking about El Salvador. There's governments that are passing laws for it. Even the United States Securities and Exchange Commission have said it's a commodity. So you can look at Bitcoin and say, okay, there's a reason for that to exist, right? Personally, I'm long a lot of them. I'm not telling you should buy it or not. What I'm saying is that Bitcoin is the type of thing that will survive this cleansing. It's not going anywhere anytime soon. Case in point, Ethereum, very similar. It was the first crypto that actually had sort of wide use cases in terms of for decentralized finance, for people to build other technologies on. So you have Ethereum there, right, which has gotten slaughtered as well. But if you're long Ethereum, and again, nothing is a guarantee, the chances are that over the next 3 to 5 years, that it's going to come roaring back in the next bull cycle. These things always go in cycles, and it's going to survive this and do very, very well. Those are two. The problem starts after that. So I have been behind a couple. I've never sold any crypto, just so you know, but I've gotten involved, put my name in a couple of things. Why did I do that? One is because they had actual use cases. All right, but they're very long-term, and there's also a nascent market. But the point is, if you look at a lot of the things that were taken public, they just simply don't serve a purpose. Now, at the end of the day, some of these are going to find their footing. They're going to prove to actually have real uses in the legitimate world. And those will survive this bear market for crypto and will almost certainly, and again, nothing's guaranteed, achieve highs that are far higher than they were at the peak of this bull market. So just so you understand, you can't, if you're looking at crypto right now and you're ready to panic and sell your Bitcoin and your Ethereum, I'll never tell you what to do, but you need to take a deep breath and get sober about this and not play into the panic. Okay, Warren Buffett said it best. I want to be, when other people are being greedy, I'm going to be fearful. When everyone else is full of fear, I'm going to be greedy. Right now, the entire world of crypto is paralyzed by fear. So does that mean you should be out there buying in droves right now? Well, I'm not saying that, but I'm saying that if you go back in history, these are the moments in time where the most money is typically made in a market. Now, when do you step back into the crypto market? Well, there's a problem, okay? So remember I said there's a couple of different crashes all wrapped up into one. Well, the first one is the 1999, 2000, when the bubble burst for .com, right? So what that was, let's sum it up. It was simply companies that never should have been made public. There was no reason to go public. There is no reason for them to exist. They were stupid ideas. It was dogshit.com, and that was enough to raise you money from VC and get floated on an exchange, right? So all of that shit has got to be weeded out. It's got to make its way through the system. That's part of what's happening right now. All right, this is it. The putt to win tournament. If you sink it, the championship is yours. But on your backswing, your hat falls over your eyes. Is this how you're running your business right now? Poor visibility because you're still relying on spreadsheets and outdated finance software? To see the full picture, you need to upgrade to NetSuite by Oracle. Bottom line, I've been there myself. Listen, using NetSuite is like, honestly, it's like turning the light on when you've been running your business in the dark. It's a massive game changer. It is the #1 cloud-based financial system to power your growth in the world. That's NetSuite. It's got visibility and control over your financials, inventory, HR, planning, budgeting, and more. NetSuite is everything you need to grow your business all in one place. With NetSuite, you can automate your processes and close your books in no time while staying well ahead of your competition, and that is crucial. 93% of surveyed businesses increase their visibility and control after upgrading to NetSuite. Bottom line, over 29,000 businesses already use NetSuite. NetSuite has a new financing program for those ready to upgrade at netsuite.com/wolf. Head to netsuite.com/wolf for this special one-of-a-kind financing offer on the #1 financial system for growing businesses. netsuite.com/wolf. Number 2, 2008, the housing bubble. So what happened there? Well, there you had what's called the contagion effect. You had all of these companies, these big Wall Street banks and commercial banks and insurance companies that were essentially cross-collateralizing each other. So you had these things called credit default swaps, which are basically insurance on toxic mortgages. So what you started seeing was huge insurance companies like AIG, largest in the world, right? One of the largest in the world, right? Massive companies like Lehman Brothers, mortgage loans countrywide. So all these different arms were all involved together in making this bubble, okay, form and grow larger and larger and larger. And the amount of leverage in the bubble was massive. So the problem with that is that when a bubble bursts and there's leverage, you have the secondary effect. You call it a contagion, where, okay, so the market drops and everyone loses money, but that's only the start of it. Then you have people who start getting what are called margin calls. So you buy on margin, which means that you're using the leverage. It's like when you buy a house, let's say a house is $1 million, you don't put up $1 million. You might put up 20%. $200,000, and you borrow the other $800,000 from a bank. Well, that works really well in real estate, especially when it's your primary residence, right? Why? Well, #1 is because the bank can't just call your loan for no reason. In other words, the bank can't look at your house and say, oh, real estate has dropped. It's gone down to $800,000. So theoretically right now, you don't have any equity left in your house. You need to sell that house, right? You need to put that house and list it for sale. If you don't list it, we're going to make you list. We're going to force you to sell, and we're putting that house on the market. They can't do that, and that's not how mortgages work. So even if the value of the house drops while you're living there, you're not forced to sell it. So while you've leveraged, right, you've borrowed 80% and sometimes even 90%, which has proved to be dangerous in the past, right? But if it's your primary residence, right, people are very likely to keep paying their mortgage. The last thing they're going to default on is their primary residence. An investment property, a second investment property, a third one, those they might not pay the mortgage on, and those will end up going into foreclosure and ultimately be sold, right? But when it comes to a primary, where you live, it's where you live. You're going to pay your mortgage the same way you pay your rent, right? So while it might make sense to borrow that much money when you're buying a house, and there's also tax deductions you get, right? It's a very different game when you're dealing on Wall Street or in the crypto market. When you're buying on margin or with leverage in crypto, what happens is, let's say some of these companies were doing insane things. 90%, even more. Let's just stick with 90% for a second, because that harkens back to the 29 crash. But I'll get there in a second, because it's 3 crashes wrapped up into one. But people were buying on leverage. So what it does, essentially, when the value of your coin drops, the brokerage firm, the crypto firm that lent you the money, they'll say, "Oh, wait a second. No. You bought $1 million or $100,000 worth of a coin. You only put up $10,000. The other $90,000 you borrowed from us, right? Well, that $10,000, guess what? That's gone. The coin has gone down so much right now that you only have like $200 left. That's not enough. That's too risky for us." And they will say, either send us more money, it's called meeting the margin call, or you're forced to liquidate the position. So what happens is, as the market starts to drop like this, you have this effect going around where people are forced to liquidate positions to meet their margin calls. And then what you start seeing is, behind the scenes, and this is where the disaster starts, the big firms themselves start lending each other money and cross-collateralizing, all to make fees. They have these sort of esoteric products they create where they essentially make derivatives of derivatives and so forth, right? So you see firms like a Celsius, one of the biggest firms out there, that's offering 20% interest. How the fuck are they doing that? How are they offering 20% interest? Well, obviously, because they were getting more than 20%, right? But in the real world of finance, that doesn't exist. That's not sustainable. If you go back in history, there is no way to make more than that. You just can't. So something was going on. Was it a Ponzi scheme? Were they going out and lending at even higher rates of interest to other people? Whatever was happening, the point is when the market starts to drop, so everyone loses money in the beginning, now you have the secondary effect, which is all the large firms that were playing the leverage game start to go bankrupt. And that's been happening each day. It started originally, by the way, what was the big disaster, right? We had Celsius, right? The first one, though, was Terra, right? So Terra drops, Luna, right? The so-called unstable stable coin. That drops, $50 billion is lost. Well, okay, fair enough. A lot of people lost money. Some funds lost money. But unfortunately, institutions that were essentially the kind of the benchmarks of the crypto world, they lost huge sums of money, and they were lending to each other on leverage, right? So what's happening as they fold, you start seeing it's this forced liquidations. They come on the market in the same way, right? And now you have the secondary contagion, this effect that's happening right now, and the market's getting battered and battered. Even long after the individual investors kind of out of the game, like, all right, it sucks. Everyone's lost their money. It kind of sucks. We're down 70%, right? You're saying, who the fuck is still selling? Well, now you have institutions that got caught with their pants down, and they're in this much bigger game of liquidations that could take months, because there's lawsuits involved, there's trustees involved, there's secret behind the scenes deals where people are trying to buy other people and everyone's trying to stop the contagion. My experience with this is, once it starts, it is very difficult to stop until it reaches bottom. So what am I saying? I'm saying is there's probably still some significant pain left in the crypto world right now. There just is, all right? So, am I buying right now? Yes, I'm buying lightly on the way down, because I don't know where exactly the bottom is going to be. But you need to be very careful, but don't panic. What you don't want to do is get caught up in it's going to zero, it's never coming back. I really don't believe that's the case with the really great stuff. I mean, when I say Bitcoin, Ethereum, maybe one other, okay? So if you're holding those, I wouldn't look at that and just say, I got to get out before it goes to zero. That's not what's happening right now. What's happening is you have this secondary effect of institutions that literally were just operating in a very risky way, and now they're paying the price. And as they pay that price, they dump coins on the market, and it drives the market lower. That's what's kind of the second thing that's happening right now. The third thing that's happening right now, which is hearkening back to 1929, is simply a complete absence of any rules or regulations, which is a massive problem. And I've been saying this, I've been screaming this for the last year. I know this better than anyone probably, what happens, right, when people can get involved without that much regulation. I was in an area of the market that wasn't that regulated back then. Okay, I was in low price stocks, right? in crypto, it's like literally, it's the Wild West. It's almost exactly the way it was back in 1929, but on steroids, because money moves much faster now. The positions are much larger. So what you had is all this insane behavior with influencers pumping up coins, and as they're telling you to buy, they're selling into your buying. You have issuers with no transparency. They're raising money. Companies are raising money. They're issuing tokens, but there's no reports being filed. You have no idea what financial condition they're in. You have no idea what they're using the money for. For all you know, the money can be going right into the pockets of the owners or massive salaries. There's no formula. There's no reporting that's under one central authority. Everyone say, okay, look, here's the playing field. Here's the rules. You have to report these numbers, and it has to be reported on this day. So you could actually look at these companies and say, here's what's going on. It's all in the dark right now. No one knows what's really going on with these companies. No one knows what's really going on with these brokerage firms, these crypto brokerage firms. No one really knows what's happening with these exchanges. And then lastly, the biggest one of all, which is a big concern, is no one really knows what's going on with Tether, USDT, which is the largest stable coin that essentially pegs the entire crypto market. There's some transparency, better than it used to be, but I've always been nervous about Tether since the beginning. So it's still there. It's still somewhat of a black hole. So what happens is when very, very smart investors that are managing huge sums of money, when they see a weakness like this, they will exploit it. And they do what are called bear runs. They actually will get together. It's illegal, but they do it all the time. And they will collude together to try to break a certain security. In this case, they'll try to create so much selling pressure in Tether, like they did this with Luna, and it worked. They drove it to zero, well, close to it, right? They tried the same thing, say, we can create enough uncertainty and put enough pressure on this token, we can turn it into a self-fulfilling prophecy. We can actually crack it. And that's what's happening right now. So you see concerted efforts on the parts of very, very large investors that have infinitely deep pockets actually going after the crypto market right now to make money. Why? Well, there's fucking no regulation. There's no one to stop them right now. So until regulation comes into this market, what you're going to keep seeing is shitty coins being issued, no financial transparency of what the companies are even up to. You have no idea what's going on with the trend. Just, I took a look at some of this. I had a coin myself. I was tangentially involved, not in the day-to-day, but I put my name on this, and I'm saying, how is this thing trading? Right? I never sold a single coin, by the way. And I'm saying, why? Where is all the selling coming? You can't even tell what's going on. So even if you're from an issuer that wants to do the right thing, you literally are looking at this and it's like Tombstone, Arizona before the herbs came to town. It's like that bad. All right. There's no transparency. There's no law in the Wild West right now. So I would tell you that until there is regulation, real regulation, and people start going to jail for the shit they did, you're never going to see the crypto market really come back the way it should. So that's very much like 1929. So what happened after 1929? Take a guess. You had the formation of the Securities and Exchange Commission. So the Securities and Exchange Commission was specifically created in 1933 after the crash of 29. Why? To restore confidence in the market. Right now, everyone's lost confidence in the crypto market, saying it's crazy. You don't know what's going on. There's scams everywhere. How do I know what to buy? Everyone's full of shit, right? There's a lack of confidence. So what you're seeing right now is not even that there's not interest. There's a lack of confidence that it's a level playing field. And that's well-deserved. So my opinion here, and I think it's right on target, is that until real regulation comes into this market, you're never going to see it really take off the way it should. There's a desperate need for regulation. So what am I saying? I think that number one, I think that there are certain coins that are going to, over the long term, do tremendously well. I really believe that. Number two, I think that the market still has lower to go. Do I know that for sure? I do not. I don't know whether I've always said, people say, where does Bitcoin? I say, I don't know, 100,000 or 20. I don't know where it's going. Who knows? You don't know. No one knows where something is going. You're lying, or you say, oh, it's going. It's not true. All right. You don't know where it's going short term, but long term. My belief is that if real regulation comes into this market, what you will see is a massive increase in institutional buying. The real money coming in. Right now, you don't really have institutions. You have one, Michael Saylor. I mean, one or two. Most of the money is not like Michael Saylor from MicroStrategy, where he's actually buying and holding for the long term. Most of the money in Bitcoin with institution was short, hot money. Means they're in, they're out. Now, why is that so important? Well, hot money, that short-term money, that money is seeking the highest yield over a very short period of time. It's not concerned with long-term, what's the long-term outcome of Bitcoin is digital gold. It's not about that. It's like, how do I make the most money over the next 90 days of trading? So that type of money is very, very sensitive to interest rates. And that is the last point here, which brings us to the whole overall stock market, the financial system, is that right now we are finally back in a normal cycle. This is a normal cycle, by the way. So let me just give you some education here, some historical perspective. We're in a normal cycle where the Fed is starting to tighten rates and reduce the money supply to stop inflation and, well, they won't say it, but trigger a recession, which is part of almost a necessity to get things back under control. So let me go back a second here. Many of you, anyone who's under the age of 30 here, it's listening, you've been living in an artificial dream world for the last 15 or 20 years. Seriously, this is not the way the world works financially. Historically speaking, you do not have these prolonged 20-year periods of ultra-low interest rates without inflation ever kicking up, without ever having any type of economic cycle here. All you had here in the United States was you went from lower interest rates to lower interest rates to absurdly low interest rates to even lower interest rates. And at the same time, you went from having loose monetary policy, meaning where you're gonna, they're not essentially taking money out, they're making it kind of easy to have credit in the system and so forth. You went from that to ridiculously easy credit to absurd, the utter ridiculous to let's give away free fucking money to people and have them stay home and not work. That's how it ended up. So the pandemic was the final straw. How about this? What else can we do? I got an idea. Let's just pay people to not go to work anymore. We're going to just send them money. I got almost $1 million. I was saying, fucking send me the money. I'll take the money. I have business. Give me the fucking money. Why not, right? So stay home. Don't work. Don't pretend to work online. I get that, right? But, you're not going to work. We're going to just have you stay home, order from fucking DoorDash, and buy shit on Amazon. And so all the local economy, the stores that need you, they fucking suffer and get destroyed. The big platforms that can operate everything online, that will thrive, right? They literally created a situation that was so fucking toxic. And as it's happening, everyone's like, gee, I wonder how far this can go. How long can you kick the can down the road? Everyone's saying, we got this $30 trillion deficit. Interest rates have been so low for so long. They're giving away free money. Then they're going to reduce, they're going to forgive student loans. How long can you kick the can down the road? The answer is until 2022. That's how long, until now. What you're seeing right now is not an accident. It's not a shock. It's what literally had to happen after all the fucking fiscal irresponsibility of the last 20 years. And I'll tell you exactly when it started. I remember the day. So the predecessor is when the dot-com bubble burst. Back in 2000, okay? When all the dot-com, when the NASDAQ was at 5,000 and the Dow was flying, they crashed all the way back down, and there was a fucking disaster. All the internet companies, right, they all went, went down to the toilet, right? Even the very thing, Amazon hit $4 a share at one point, something crazy like that. So everything was down to next to nothing, and most of the stuff went out, just never came back, right? The great ones survived. So the economy, with that massive loss, with all that liquidity taken out of the system, the economy was seriously on the ropes. Then what happened? The planes flew into the World Trade Center. So it was just like sort of boom, Boom. 1-2 punch. Started with the dot-com bubble bursting, and then you had the planes flying into the World Trade Center, and suddenly no one wanted to leave their house. People got nervous. Everyone's going to stay home, right? So what happened? George Bush got on TV and said, if you stop spending money, the terrorists win. Go out and charge on your credit cards. Just keep it. And I understand why he did it, but what happened is after the dot-com bubble burst, there should have been there should have been a prolonged problem. You had this huge bubble, this massive bubble, by the way, right, that burst. And yet, all that happened was they took it into another bubble. They created the housing bubble. They went from bubble to bubble. Goldman Sachs was behind most of this, by the way. They weren't acting alone. But the brokers were like, hey, what's the next bubble? They took you from an internet bubble, which they created, by the way, and literally Wall Street created this bubble, just so you know, artificially. It wasn't an accident. It was done on purpose. This is what people need to understand. It was not an accident. The bubble was created to make massive fees for a small group of people that work on Wall Street. That's what happened. A very small group of people made a fucking bloody fortune. When that bubble burst, what they did is said, okay, what's the next bubble? And then the insult of the planes flying into the trade center was the perfect reason to say, you know what? Let's keep interest rates even lower. Let's loosen the guidelines on the houses so people can keep buying houses. And you went from bubble to bubble. And that's what you're seeing today is you went from bubble to bubble. And then even when the second bubble, which was the largest bubble, a bubble so big, it brought literally the whole global financial system to a fucking halt. You were this close to going to your ATM machine, sticking in your car, and it's saying, go fuck yourself. Sorry, we stole all your money. That's how bad it was. It was like literally an inch away from that. If the government would not stepped in and bailed out AIG and Goldman Sachs, you would have actually had a lockup of the financial system, right? Yes, everyone bought houses they shouldn't have bought, and they were, and people are people, but it was an engineered bubble on Wall Street that literally almost wiped out the entire world. So what did they do? Again, they stepped in and printed even more money. That's when they came up with quantitative easing, where the Fed starts doing things they never had done before. They print massive sums of money, injecting huge sums of money into the market. They bail out all of the banks, which is insane, by the way, created a moral hazard. So, meaning, hey, it's great. It's heads I win, tails you lose. If we can make as much as we want and we fuck up, the taxpayer bails us out, right? So they bail out Wall Street. They keep the game going even longer. So, yeah, there was a recession, and it was tough for a year or two, but everything came roaring back, and you watch the market go to literally insane levels over the next 10 years. After you say, how could you do that? How could you have a housing crisis like that and no one paid the consequence for it? Like what happened? No one suffered. They kicked the can down the road. So they kicked the can down the road in 2000. So when the dot-com bubble burst, they kicked the can down the road. How? They went into the next bubble and they started lowering interest rates. By the way, that's when I first went into the mortgage business. When I went into mortgages, rates had historically been 10%, 11%. When I was a kid, 18% in the 70s. So when I first got into mortgages in 2000, it was early 2002, right? After the world was recovering from the shock of the World Trade Center being attacked, right? They dropped interest rates to 7% and created the first refi boom. 7% created the refi boom. Why? Because everyone owned houses and mortgages at 10%, 11%, 13%. So everyone refinanced, was able to pull money out, pay off their credit cards, keep spending, and by making homes cheaper, essentially. So real estate rises, but by making the mortgages so cheap, you can have real estate prices rise. So you have inflation of real estate. That's why real estate keeps going up and up and up. So it kept going and going and going, and you did not allow the economy to correct itself. There was never a time when the economy could literally, legitimately have a sustained correction where it was just like sort of, tough. People made their way, but it was tough. They kept it going and kicked the can down the road until now, and finally, you can't do it anymore. Why? Because now you have inflation. So through all of those years, they were able to, by the way, and part of it was they changed the way they calculated inflation. So if you go back to the way they calculated inflation when I was a kid, inflation would probably be like 23% right now. So if you're thinking, saying, you know, they say it's 8.5%, but it seems a hell of a lot higher than that. Like I'm feeling it in my pocket, like it's not, it doesn't seem like 8. Does it seem like 8.5% to you? Not to me, buddy. I gotta tell you, at my level, you know, private planes that are up 75% or 100%, everything. Dinners are 3 times as much money. Commercial planes. I just booked a trip to Europe for my family, for my birthday's coming up, right? It's like $100,000 to fly for a bunch of first class tickets. It's never been like this. It's insane. So they say prices are up 8.5%. I don't see that. I think it's like 3 times that. But anyway, so what's happened now is finally you have this inflation which kicks up to the point where it cannot be ignored, and suddenly that's when it's got to stop. Because with inflation there, it's in all the machinations, all the bullshit behind the scenes, printing money, easy credit. You can do it forever, theoretically, because the U.S. is the reserve currency of the world, so the U.S. government can get away with that. We just keep printing money, do whatever we want. As long as prices weren't rising dramatically, everyone was like, all right, it's fine, whatever. Like, I guess they have it under control. But suddenly, when prices shoot up, there's no escaping it. And by the way, if there's an ultimate regressive tax, it's inflation, meaning that it affects the poorest people the most. So inflation is the single worst thing for an economy. Inflation like this because it affects those at the bottom the most. People that literally can't afford to fill up their car or go to the store and buy the food they really want to buy. It gets to that point. And it's a lot, I'm telling you, it's a lot higher, and we all know that, than what they're saying. It's not 8.5%. So what's happened now is you're in a position where the government, the Federal Reserve, they're kind of, rock and a hard place, right? You have an economy that they say is, well, maybe it's in fucking recession, and we all know, we all see, you feel it. So, like, I don't believe a word that's coming out of the government, but just so you know. I know what I see. I know what I hear from people around the world. I know, especially in the United States, there is a recession right now, and things are tough. There's no doubt about it. Yes, it's skewed by a few massive companies that are making money. So it gets the whole picture gets skewed. But for the everyday person that's listening to this, you feel it. You know things are not right now. So you're going into a recession, or in a recession right now. You have inflation going up, and there is something I mentioned in the beginning called stagflation. This is what I grew up with in the 1970s. Stagflation means you have stagnant growth, so it's basically like all the worst parts of a recession. Negative growth, stagnant growth, very, very tough job market, just general economic shit. You're in a cesspool of shit economically, and at the same time, though, prices are still rising. So typically, you don't have prices rising while you have a recession. Prices are stable or going, or you have even deflation sometimes. But you typically don't have prices falling, your prices rising while the economy is going south, because demand is being reduced. As people stop spending, demand goes down, prices stop rising, right? But right now, you have prices on the rise, and you have the recession coming this way. On a continued basis, that becomes stagflation. And just so you know, when I was a kid, that lasted for it was like 6 or 7 years when I was in my teens, when mortgage rates, if you wanted to borrow money, 22%. 22%. Those were the interest rates back in the day. So if you think it's really bad, you're saying, like, oh my God, interest rates are up at 7%. That's where they were when they dropped in 2002, down to 7%. Everyone's like, oh my God, they're 7%. It's so cheap. This is the great. We can all go buy houses now at 7%. That's where they are now when they're on the way up. So we've essentially been drinking this fucking low interest rate, money printing Kool-Aid for most of your adult life, everyone. This is not the way the world worked prior to this. You had these times when interest rates would go flying up, they would go back down, and you'd have recessions. You'd have, hopefully, small recessions, nice expansions. But what you're seeing now is payback for literally 20 years of ridiculous monetary policy, of printing money of not allowing it to stop. They're just kicking the can down the road, At the same time, what are they doing? They're gutting the manufacturing base, shipping jobs out to China, to Mexico. So you look and you say, why the fuck is the country in this shape? It's in this shape for a reason. This is exactly what happens when you have policies that really are designed for short-term to prop up Wall Street and not really feed the underlying economy. So that's where we are right now. So where is the economy going? Listen, my guess is I think we're going into a sustained recession. And they're going to desperately try to convince you otherwise by redoing the numbers, coming up with new ways to say it's not as bad as you think, because it's all about politics and getting reelected, right? They always try to make you think things are better than they are. And at the same time, by the way, speaking of politics, you also have this insanity right now with Biden, who seems to be wanting to purposely dismantle the country. If you actually hear what they're saying, this talking about that this climate change is the single most important thing in the world. They're saying, no, you need to live in a recession because we need the liberal world order, the way they want to see the world. They actually said this publicly, someone in the Biden administration, that achieving a new liberal world order is more important than prosperity today. So you need to essentially mortgage today. We're out of it. Forget today. It's more important that the future is liberal, that everyone uses the right pronouns and no one uses oil in the future. That's just, by the way, that's just fucking nonsense, by the way. This whole idea that we're going to be moving away from oil, not to mention oil is used in forget just for gasoline for cars, in everything that we use every single day. Our whole economy is based on oil. But forgetting that for a second, Biden literally has taken us from being energy independent, a net exporter of energy, to being an importer, unable to help the world now. And what does that do? Well, guess what? You have this other stray thing going on over in Ukraine, right? So Russia attacks Ukraine. We cut their oil and we say, no more Russian oil. Drives up oil prices. Well, guess what? That wouldn't have been as big a problem if the U.S. was still energy independent. We could have actually been exporting to help our allies in Europe and elsewhere. But instead, global warming or climate change was more important right now. So here we are. So we're in a position right now where the world essentially is saying that the governments are saying it's more important that some liberal agenda gets achieved over the next 10 or 20 years than prosperity right now today. I don't know about you, but that fucking drives me. When I hear that shit, it drives me crazy. It literally drives. I don't even know. It makes me want to run for office, but I never would, because and it's just, we're in a position right now where our politicians no longer even are working towards our own best interest anymore. It's become this kind of self-reinforcing organism that just serves itself, stays in power. And what we're feeling right now is the brunt of literally probably 30 years of really, really bad decision making. So what does that mean for you? What do you do right now? Well, number one, if I had to say the best thing to do if you're in the world of crypto right now is probably to do nothing. Seriously, it's probably just at this point to just, whatever you've lost, you've lost. If you have anything that's right now on margin or leverage, I would strongly advise you to get out of a position that's leveraged, and in the future not to be using leverage positions, to be playing for the long term to avoid leverage. If you're in the stock market, I would tell you to be focusing on buying just the S&P 500 and holding it. Seriously, rather than trying to go on and watch CNBC or listen to the latest tip on Wall Street bets, if you just to buy the S&P and hold it, it's going to be your safest long-term bet. But right now, what you don't want to do is panic. Not a time to panic. This is just, this will all, as bad as it might seem, it's going to all work itself out over the next 1 to 3 years. Between those two, you're going to magically see, because it all goes in cycles. The underlying problem will still be there, a huge deficit, the manufacturing base of being gutted, right? The problem still exists, but the actual day-to-day will change. It always does. So right now, whatever you're thinking, right, don't go into this panic mode where I'm going to take all my money, sell everything, and just go sit and put cash under my mattress. That's probably the worst thing you could do. Everything goes in cycles. In terms of the crypto market, my guess is until they stop raising interest rates, nothing good is going to happen. In other words, right now we're in a tightening cycle, right? So basically, The Federal Reserve is raising interest rates. As they keep raising rates, things like bonds, treasury notes, fixed income, it's called, become more attractive. Meaning you can get more, you could just say, okay, hey, I want no risk. I'll put my money into a bond and make 6%. Better deal than going into a risky stock or crypto. So money flows out of stocks and crypto into less risky assets like bonds. So as this process continues of tightening, and they're going to be raising interest rates again this month, it puts massive pressure overall on the stock market and on the crypto market. It just puts pressure on macro. So money starts flowing out of those markets into the fixed income market. So that's just a massive headwind right now on top of everything else. Until that stabilizes and still we start to reverse and go, and it's going to go up and the rates will go back down again. Until that starts, mark points, when that first interest rate gets cut, you will see on that day, crypto flying up. Well, when they start to talk, even that they start to talk about there's one coming, there's an interest rate reduction coming, that's when you'll start to see the market flying back up. And hopefully by that time, there will be regulation in place. If those two things coincide, if those macro headwinds shift in your direction and there's a regulation in place, mark my words, and then I would say, and again, always do what you think is best. But for me, I would say that would be a really, really strong signal. The time is to start buying. Bottom line. All right. So listen, I love you all. And I just want to kind of give you, I'm writing a book right now on this stuff. So I've been kind of silent lately, have my head buried in that. But times seem bad right now. This will correct itself. Just remember, though, it's not an accident. This is a result of kicking the can down the road for literally the last probably 25 years or even more than that, but literally for the last 25 years, it's been an interruption of the normal interest rate cycle. And here we are. Take care, share this with your friends. Have a great 4th.